Welcome back to Investing Talk Podcast. Today, we're tackling a question quite a few of you have asked. Is AstraZeneca a good time to buy now? You've shared your notes, articles, research, and our mission really is to distill all of this for you so you can walk away well-informed, maybe with a fresh perspective. And just before we get into the details, if you find this discussion helpful, please do remember to subscribe, like, maybe leave a comment. Your support, honestly, means the world to us. Maybe even consider buying us a coffee if you enjoy our insights. Also, definitely, if there's a specific company you'd like us to look into next, just leave a comment below. Let us know.
Yeah, absolutely. And AstraZeneca is what's a fascinating case study right now in the pharma sector. The material you've all sent in gives us a really comprehensive look. From multiple angles, we're going to explore its financials, which look pretty robust, its market position, what the technical charts might be telling us. And I suppose ultimately try to figure out if the strong performance we're seeing is already, fully baked into the stock price.
Okay, let's unpack this, starting with the fundamentals. Numbers often tell the clearest story, right? The reports for AstraZeneca show some, remarkably strong financial performance. What are those revenue and earnings figures from the first half of 2025 really telling us? What's the why behind them?
Well, what's striking is the consistency and the size of the growth. Total revenue for the first half of 25, up 11%. And that's not just, a decent number. It's a sign they can expand market share, integrate new products, which isn't always easy for the big pharma players. It suggests a pretty efficient machine running things behind the scenes.
Right.
Looking at Q2 specifically, the earnings per share, the EPS, was $1.09, bang on consensus estimates, so analysts seem to have a decent handle on them.
Perfect.
And the forecasts look good, too. Fiscal 25 EPS projected around $4.42, maybe climbing to $4.97 in 2026. And maybe even more importantly, their core EPS. That surged 17% year over year in the first half.
17%. Wow.
Now, that really points towards, better profitability, better operational efficiency. They're turning that top-line growth into real bottom-line strength.
So, okay, revenue growth is definitely strong, but looking a bit deeper at the balance sheet maybe, how do these revenues and earnings translate into core financial health, thinking about debt levels and their commitment to R&D for future growth?
Right, precisely. So they pulled in, $54.1 billion in annual revenue in 2024. That was a noticeable jump from the $45.8 billion the year before. So that growth feeds into gross profit, obviously. And crucially, they're doing this while spending heavily on research. Now, the exact debt figures for 2025 aren't detailed here, but historically their debt levels seem, manageable compared to their cash flow. And that supports these big ongoing investments in R&D. It's clear, innovation funded by strong operations is core to their long-term strategy.
Yeah, and this is where I think it gets really interesting. Their competitive position. I mean, AstraZeneca is already a top global player, right? But the sources show they've been incredibly busy on the regulatory front. What's driving that edge right now, beyond just the financials?
Oh, they absolutely have been busy. The material points to 19 regulatory approvals just in the first half of 2025.
19.
That number alone says a lot about their innovation, sure, but also about how effective their regulatory team is, how agile they are. Getting things approved quickly like that, it's a real competitive advantage, Reduces time to market, brings revenue in sooner than rivals, and that, combined with a diverse portfolio and those big R&D investments, it definitely strengthens their position.
And it's not just about their own direct approvals either, is it? The sources highlighted some broader market signals that seem to kind of validate their overall strategy.
That's a really good point, yeah. Take the recent FDA approval for Insmed's drug for bronchiectasis. Now, that's not AstraZeneca directly, but it's significant because it sort of signals this cross-sector validation for AstraZeneca's own respiratory work, which is a key area for them.
Ah, okay. So it shows the market sees value there.
Exactly. And beyond drugs, they got these HBA ACE awards for their Young Health program. It's not just a pat on the back. It actively aligns them with ESG trends, environmental, social, governance, which, as you know, is increasingly important for investors looking for sustainable value.
Right, the ESG angle.
Definitely. Plus, there's an ongoing asthma study using a greener propellant, HFO. That positions them really well for environmentally conscious markets. It shows they're thinking beyond just the next drug, looking at long-term sustainable innovation. That resonates.
It really is fascinating how they seem to be carving out their own path here. You look at the broader pharma sector, maybe led by giants like Johnson & Johnson, showing just a modest, 0.59% intraday gain recently. But AstraZeneca surged 2.73% relative to the sector. What does that divergence tell us? Is it about this unique strategy? Does it suggest maybe the market's really starting to value these ESG things more?
That outperformance is, well, it's a huge signal, isn't it? It really does highlight AstraZeneca's unique spot, especially in respiratory innovation. And yeah, that focus on ESG seems to be getting rewarded. It shows they can capitalize on these niche regulatory and sustainability opportunities kind of diverging from the rest of the sector's path. But, and this is the big but, this strong performance naturally leads to that key question for anyone thinking of investing.
How much is already priced in?
Exactly. How much of this good news, this growth, is already reflected in the current stock price?
Yeah, the million-dollar question. And our sources don't give us those explicit up-to-the-minute PE, PS, PB ratios, which makes a direct comparison a bit tricky. But what clues do we have? Maybe from its historical valuation or broader sector trends. Can that help answer the priced-in question?
You're right, we don't have the exact current ratios here, but we can infer quite a bit. Historically, AstraZeneca's valuation multiples, price to earnings, price to sales, price to book, they've generally been at or maybe slightly above the pharma industry median.
Okay, so often a bit of a premium.
Yeah, usually justified by that strong pipeline, consistent growth, their global scale. The market does seem to value AstraZeneca at a premium compared to some, let's say, lagging peers. And that premium probably reflects that high growth profile, those R&D wins we talked about, especially the recent approvals. So no, it's not exactly cheap, but the market seems to think it's worth paying up for that quality and the growth prospects.
Okay, let's switch gears a bit and look at the technical signals. The stock recently had a sharp intraday rally. What did that actually look like on the chart, and what might it suggest maybe to a shorter-term trader?
It definitely had a noticeable jump, yeah. The stock surged 3.23%, hitting $77.78 in a single session, which interestingly outpaced its own 52-week average PE ratio of about 22.36x. So it's trading at a higher premium relative to its recent past.
Right.
It's also trading pretty close to its 52-week high, which was $87.68. So clearly strong momentum. The material suggests that recent earnings, coming in ahead of expectations, might mean increased volatility around the next earnings release in July.
Ah, so potentially bigger swings coming up.
Could be. Traders might see bigger price movements around that time as the market digests new info.
And digging a bit deeper into those technical indicators, beyond just the price action, what specific signals are worth noting? Things like MACD, RSI, Bollinger Bands.
Yeah, looking at the specifics, there's some interesting signals. The MPD moving average divergence is at 0.94. It's showing a bullish divergence from its signal line. Think of it like the stock starting to press the accelerator, suggesting upward momentum might be building.
Okay, bullish divergence.
Then you have the RSI, Relative Strength Index, at 56.86. That's kind of in neutral territory. RSI measures the speed and change of price moves, sort of an overbought, oversold gauge. Being neutral means it's not extreme, suggesting there could be room for an upward breakout if momentum keeps up.
Right, not overstretched yet.
Exactly. And then looking at volatility with Bollinger Bands, the price, 77.475 cents, is really close to the upper band at 77.297 cents. Often when a stock hits that upper band, it suggests it might be a bit stretched short term. Could be due for a pause or a small pullback before potentially moving higher again.
And what about the longer-term picture from the charts and those key price levels everyone watches, support and resistance?
Right.
What do historical patterns tell us about what happens after a big jump like the one we saw?
Well, for the longer term, the 200-day moving average is way down at $70.42. That's quite a bit below the current price. That's a strong signal of long-term strength, suggests a well-established uptrend.
Okay.
In terms of levels to watch, key support seems to be around $68.33. That's where buyers might step in if there's a dip. And resistance is right around where it's trading. That's 77.297 upper Bollinger Band level it's been bumping against.
Got it.
Now, interestingly, about what happens after a big 3% jump,
Right.
the data suggests the win rate over the next 3 days is decent, about 58%. But the average return over that period historically is only 0.24%.
Oh, so not huge follow-through usually.
Right. It tends to finish positive more often than not in the very short term, but the magnitude of those subsequent gains is often pretty modest. It's not usually a sign of an immediate explosive move, more like a continuation of the existing trend.
Okay, let's move beyond the numbers and charts for a moment. What about recent news, investor sentiment? What's really driving AstraZeneca right now? And looking ahead, what are the potential catalysts that could, move the needle?
Sentiment seems generally quite positive, I'd say. Those Q2 earnings we mentioned, being right in line with expectations, that showed solid underlying momentum. And that, combined with, again, those 19 regulatory approvals in the first half, that certainly fueled optimism.
Yeah, hard to ignore 19 approvals.
Exactly. And there haven't been mentions of significant analyst downgrades or anything, suggesting coverage remains pretty favorable. There seems to be a belief in their growth story.
And looking ahead, what are the upcoming events or developments that could really impact the stock? Short term and maybe longer term, what should investors be watching?
Well, short term, the big ones are definitely the next earnings report. That's always key. And any major news on drug trials or new regulatory approvals, given their recent track record, another FDA or EMA approval could definitely spark some momentum.
Right.
Longer-term catalysts? Well, ongoing M&A activity in the whole pharma sector is one thing. That can shake things up. Broader regulatory shifts are huge, too. Things like drug pricing reforms, reimbursement policies, those can impact the entire industry. And of course, new drugs coming through their pipeline or competitors' pipelines. That's the lifeblood of pharma. Plus, you always have macro factors like global healthcare policy shifts, patent expirations down the line.
Yeah.
Those are big long-term considerations.
Okay, but every investment has risks, doesn't it?
Yeah.
AstraZeneca, what are the red flags? What should people be aware of? It reminds me of that old saying, don't put all your eggs in one basket, especially in pharma, where one drug failing can sometimes really hurt.
That's a really crucial point, yeah. Stock-specific risks. Competition is always there. It can erode margins on existing drugs. Regulatory setbacks are a big one, too. Delays, rejections for new drugs, litigation is another factor, can be costly. And the R&D spend is massive, right? There's always the risk of pipeline failures, promising drugs just not making it to market. And, sudden management changes could introduce uncertainty, too.
Okay, those are company specific. What about broader risks?
Broader market and sector risks definitely apply. You could see sector-wide pricing reforms, like we mentioned, increasing competition from generics or biosimilars as patents expire. Currency fluctuations are a factor, too, given they operate globally. And the pharma sector itself can sometimes fall out of favor with investors. Sector rotation, where money moves elsewhere during bull markets, could affect valuations.
Okay, so pulling all this together then. For someone listening, trying to make a decision, what's the overall investment thesis for AstraZeneca? What's the distilled takeaway here?
Well, the overall rating given to the source material we looked at is actually an 8 out of 10, which is pretty strong. And that's underpinned by, several things we've discussed. That robust revenue and EPS growth, the impressive innovation pipeline, again, those 19 approvals, and generally solid financial health, manageable debt.
Right.
Now, its valuation, as we said, isn't exactly discounted. You're paying a fair price, maybe a slight premium for a quality company.
Right.
But the argument is that its strong execution, plus the potential from future product launches, provides that continued growth potential. The fundamentals seem very much intact. It looks like a company doing things right.
And what kind of investor is this best suited for? Is it more of a quick trade or something for the long haul? Or does it depend on your risk appetite?
I'd say, based on this analysis, AstraZeneca looks best suited for long-term investment. That's really down to its proven ability to consistently compound cash flows, to grow the business through that top-tier pipeline over time. If you're a long-term investor, you're looking at a company that seems capable of steadily increasing its value over years by bringing new drugs to market.
Okay, so patience is key.
Pretty much. Short-term traders, on the other hand, they might see sharp moves around earnings or approval news, but they face more uncertainty. Short-term trading means more exposure to those potential sector rotations, that episodic volatility. Predicting the immediate next move is just much harder.
Interesting. So primarily a long-term compounder, but for those maybe with a higher risk tolerance looking to potentially amplify gains around specific events, our sources did mention some specific short-term options plays, maybe worth touching on, even if they're not for everyone. What did those suggest?
Yeah, they did highlight a couple for those interested in, let's say, leveraged exposure. 2 call options expiring August 22nd, 2025. First was the $75 strike call, described as having high sensitivity, meaning its price moves a lot with small stock price changes and rapid time decay.
Meaning it loses value quickly as expiry nears.
Exactly. So higher risk, potentially higher reward for a very short-term aggressive bet. They noted a 5% stock move to $81.27 could yield a huge 247% return on that option, hypothetically. The second was the $77 strike call. More balanced sensitivity, still responsive to price swings, maybe better for a slightly less aggressive midterm play.
Okay.
A similar 5% stock move there could potentially generate a 212% return. So, yeah, they show potential for big returns if the stock hits certain targets. But, and this is crucial, options are risky. A breakdown below that key support level, $68.33, would be a really bearish signal, especially for options holders where losses can mount very quickly.
Right. So definitely not for the faint of heart. Okay, so wrapping up, whether you're looking long-term or maybe considering a shorter-term play, AstraZeneca presents a really interesting case, doesn't it? Strong fundamentals, impressive pipeline, recent catalysts. But, as always, remember, the pharmaceutical sector is dynamic, it's constantly changing, and any individual stock performance always, always carries risk.
Absolutely. And maybe this leaves you with an interesting question to ponder. How do companies that manage to effectively integrate that relentless innovation we see with a really strong commitment to sustainability, like the ESG aspects we touched on, how do they truly perform over the long haul, especially in a sector as critical and as publicly watched as healthcare?
That's a great thought to leave everyone with, and definitely one that goes beyond just the numbers on a screen. Thank you all for joining us on Investing Talk Podcast. Please don't forget to subscribe, like, and comment with your thoughts, or let us know about any companies you'd like us to look into next time. We really appreciate you being with us.